Hello and welcome to the trade setup. In this video we are looking at silver and gold. It is time for another update, and we start here on the silver chart where we have extended higher within one of our two scenarios, which gives us actually a lot of new information and extremely clear levels of support we can be tracking for direct continuation to higher prices into a structure that would be even a confirmation that a more substantial bottom would be in place. Now, on the gold chart, it's actually a quite different story. That confirmation might already be in place, even though it's not the perfect structure. But to start here on the silver chart, we are looking at a larger diagonal pattern, right? This would have been a wave 1 up, we would have here a wave 2 down, and now we would actually like to still extend to higher prices within this wave 3. Not necessarily within infinite amounts of waves, but still, this internal wave C of the large wave 3 would look better with one more high. Now, in this structure we have been tracking as well an ending diagonal because it failed to hold the relevant levels of support within the internal structure. We have here a wave 1 up, a wave 2 down, a wave 3, and this would be our wave 4 correction, which actually failed to fulfill its idea of an A, B, C pattern, right? Within this wave C, we only have 3 waves to the downside. Well, what does that mean? It means it's not a wave C. You see, in this case, we have broken above the 61.8% retracement. We got a sustained break, in fact, and it was our strong signal that this structure wouldn't be extending to even lower prices within a wave 5, right? And we have added also the 78.6% retracement. We explicitly described why we want to have this on the chart as well, and plainly we have found resistance at various of these Fibonacci retracements, right? The 61.8% retracement, the 50% retracement, the 38.2% retracement, and we expected to see another rejection at the 78.6% retracement, even if it wasn't within the count we were tracking internally. And there it is, we have gotten another rejection exactly on the Fibonacci level. Now, what does this mean? Well, it means that we shouldn't fully dismiss the possibility of another type of extensions to lower prices, but this rejection is actually not a confirmation that we will not be extending to even higher prices, because we have actually broken above our upper boundary trend line. Now, in this structure, we have been tracking one main scenario on the larger time frame. We were looking for a possible leading diagonal to be taking place, not an impulse. That is clearly not something we really trust to actually play out, but an ending diagonal where within this structure we would have a wave 1 up, a wave 2 down, and this would be our wave 3 to the upside. Well, what did we say about this wave 3 in the previous videos? We mentioned that we would require to reach the ideal target, the 138.2% extension of the wave 1. That sits at $88, and we are not there yet. So I would consider that unless we extend to higher prices in this structure, we wouldn't have a more reliable pattern in place. We so far only have a 3-wave pattern to the upside in the case of this chart so far, and I'm looking still for continuation to higher prices if we are to build something that would be more reliable ultimately. So, in the smaller time frame, we have been tracking a path to this structure, to this idea of reaching these levels. We have been tracking an internal ending diagonal within the wave C of the wave 3. And within it, we had here an A, B, C pattern within the wave 1, right? This would have been a 1-2 structure. And now, once again, we are looking to reach the ideal target within the wave 3, which sits, once again, at the 138.2% extension of the wave 1. And in the case of this movement, it is $84.5. Well, we haven't gotten there, and not only that, but I also would consider that we haven't followed through within this structure where we had a wave A top in place, right? This was a consideration to make given the size of this correction in terms of proportions, given that we have gotten perfectly into the first level of support. But we highlighted that for this to complete the wave C, we would require to build a 5-wave pattern, right? a 1, 2, 3, 4, and 5, something like that. So far, we only have a 3-wave structure, and we did provide the blue scenario, which would have allowed an extension of this wave A in orange in the eventuality that we wouldn't manage to build the entire wave C, where we wouldn't build a 5-wave pattern in this area, but a 3-wave structure instead, which is exactly the case. So, what is the path forward now? Well, I would be looking to instead have the wave A top here, the wave B to be information, and I would still be looking for a wave C to take us to higher prices in the end. Now, technically, it would still be possible that this would work out as a wave C in the previous scenario as something like a 1-2 setup, where the wave C itself would be an ending diagonal. In such a structure, the levels of support would currently still be holding, but it's not particularly ideal because we only have a 3-wave move to the upside. But we know that if we break below 78, basically $79, which so far has only been an unsustained break, we should expect the wave A to have a top in place. Yeah, I won't necessarily focus too much on this interpretation. I would rather have the larger area of support extended, since this support zone has also been reached for this as a larger wave B. Now, definitely if we are to already reverse into new highs within this wave C, I would probably prefer the area of a wave C extension directly, but for the sake of simplicity, we will have this support zone in place instead, and ultimately if we get a reset of the current bottom that we have in this correction, well, that would be a sustained break of the internal extension, right? Again, to be clear, the structure where the wave A had topped here, the wave B had bottomed here, and the wave C would have actually been ongoing. Basically what we had previously on the chart. Now, my main area of support for continuation to higher prices on the silver chart sits here at the levels between $79 down to $74.7. This is our primary count, and what I also want to highlight is that we have a different scenario where instead of having the wave 1 top here, we have the wave 1 top here. This would be the wave 2 bottom, and in such a structure, the wave 3 could have topped actually within an A, B, C pattern. Well, even if I wanted to track this scenario instead, the area of support would extend down to the 61.8% retracement. Well, that sits at $74.6. It's basically completely overlapping with the internal area of support we are tracking in the orange interpretation, and this is a level of confluence I am considering for this structure. And even though this hasn't formed an initial 5-wave move to the upside throughout this entire structure, I actually still see this as an opportunity. I actually have extremely clearly defined levels of support where if we break below the 78.6% retracement here, we would know this pattern, this initial 5-wave move to the upside within a leading diagonal, is most likely not going to happen. Now, given that overall, on this chart, we are tracking to build an ABC pattern within this as a larger wave 5. It doesn't need to happen. A wave A can be formed of a 3-wave pattern, yeah, an ABC structure typically. And the same can be said for the internal wave A, which might be exactly what would be building in this structure. However, even in that scenario, we do not have an ideal structure, right? I would have to consider this probably something along the lines of an ABC structure. This would be the wave A, this would work out as the wave B, and then this would be the wave C to the upside. And this is probably what we would need to consider in the eventuality that we fail to hold this level of support, the 78.6% retracement. The uncertainty would create a shadow over this chart, and it would be extremely difficult to have direct continuation to higher prices with this foundation. Now, let's move to the gold chart, and I particularly wanted to highlight this structure because it's telling a quite different story. You see, in the previous videos, we have been looking for this to potentially be building only a wave 4. We had pushed above the area of resistance, but at that point only briefly. This has become a sustained break, but it's also a not so favorable pattern. It could technically work out as a leading diagonal, but the structure itself is not ideal, as I was saying. Yeah, we would have to consider this to have been a wave 1 up, a wave 2 down, and this would work out as the wave 3 to the upside. This would be the wave 4, and this would work out as the wave 5. Technically, we can adjust the area of support for a trade setup for this structure. However, this means on gold we can expect a much stronger sell-off. We would expect the large degree, wave 2 or wave B, whatever, to be in play right now. We would be watching the levels between $4,600 down to $4,260. The last level of support sits at a 78.6% retracement, and if that fails to hold, we can expect a complete failure of this idea of a wave 4 bottom being in place, right? Currently, the same as on the silver chart, as I was saying, we have broken above the levels of resistance for a potential wave 4. This wave C had failed to build. I do need to consider that this wave 4 built a WXY pattern as well, and I am looking for this to potentially have a wave 1 in place, have a wave 2 correction, and the wave 3 would come afterwards, taking us to significantly higher prices. Now, if gold follows through within this expectation, we would need to be prepared for silver to follow along and even break its internal levels of support. The gold chart actually would have a pretty interesting buy area in this yellow support box, as not only from a smaller time frame do we have a potential initial 5-way move to the upside, but this would be within the deep levels of support of the larger structure, of the larger wave 4, which would allow me to still consider this as an extremely favorable risk-reward ratio area, which makes the opportunity on this chart that much more interesting. Now, we won't go beyond this. Currently, we are still extremely far from the levels of support, and extensions are certainly possible. So far, the structure that is in place can serve as an initial confirmation, but for this to become more particularly interesting, I would still like to reach the area of support, right? I would still like to reach at least $4,600 before looking for positions within this structure, at least more aggressive ones in any case. And I come back on the silver chart. I know a lot of you are more interested in silver, probably due to the increased volatility, and we have a quite different pattern, even though we have momentum building up, but unless it manages to follow through and build its larger expectation of this idea of a leading diagonal, it would be difficult to find a confirmation that a bottom is indeed in place. We could be tracking on this chart the same area of support we are tracking on the gold chart, right? We could be looking at the levels between $74, right? The area of support would only start where the support zone for this internal wave B in orange would stop, and it extends all the way down to $65, but there is no confirmation of a potential initial 5-wave pattern. And for now, this is not a focus for me. Below $74.7, the risk of this structure would be substantially increased, and probably the gold chart may be the more attractive one at that point, and who knows, we might actually get a reset on the silver chart, while on the gold chart we form a higher low, allowing the 1-2 setup to survive on the gold chart, while on the silver chart, in the case of failing to hold this 78.6% retracement in orange, we might see a complete reset of this as an entire correction within an even more complex pattern. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoy our content and want to support us directly, check out our channel membership. And other than that, let me know what else you would like me to cover, and I'll do my best to do that in the days next ahead. And until then, I wish you a nice day, and I hope to see you in the next video. Bye bye.